I've been thinking a lot about doing a video for those of you that trade E-minis, and everything that I talk about in this video is for you. But also, if you don't trade E-minis, hold on, because these principles will apply if you trade any kind of other stocks. If you trade any kind of other stocks, especially if you trade any other kind of stocks, or if you trade the Japanese yen currency pairs. So all of that is included in this lesson here today. Now, below this video, there are a couple of things. I want to trade this system automatically with you, even on the futures market. So you can click the link below and go to the bookercall.com website, and you can fill out that form. Number two, the indicators I talk about right here in this video are available at a link below this video also, and it will say something in the description like indicators mentioned here, or something along those lines. Anyway, let's talk about it. Let's get going. Okay, so this is the S&P E-mini futures. Super popular, super heavily traded, and we're going to follow the same principles that we've been talking about in recent days in these support and resistance videos. Every single day, the market will print a pivot point. We've talked about the daily pivot point like 735 million times. We've even talked about how to get them on your charts on TradingView and other platforms, but I'm just going to focus on TradingView real quick. You go to indicators and you type in pivot, and you'll get pivot points standard. That's how you get the pivot points on your chart. You double click on those once they're on there. You choose the pivot time frame daily, and style, you just choose to show the pivot point in blue and S3 and R3 in orange. Okay, there you go. Once you get that, you're done. Get it, got it, good. Let me zoom in here, and I want to show you a day when a setup occurs. Now, it helps if you have a bullish or bearish outlook first. It helps if you know that you're bearish or bullish the E-minis in a longer time frame chart. Maybe we're on the daily, we're trading below the 5-period moving average. Maybe we're in bearish territory because we're below the 50 moving average. Whatever you like, that's fine. I actually don't care either way. I think if you're looking for a few ticks or a lot of ticks, this is a great way to look at the market from both directions anytime. Okay. On the screen in front of us right now, the S&P E-minis hit R3, or just went supremely super bullish on the 20th. This is the 20th of September, 2018, and we're going to look at a bunch of examples here, and this is going to be like hardcore technical analysis. So if you like that kind of thing, and you want to geek out on this kind of stuff together, then leave a like, leave a comment, let me know what you think about it. So we hit R3 here on the 20th, and then a couple of things happen afterwards. We print an exhaustion candle, which is, a doji or an engulfing bar or candle. So we've got that going for us. And then we also print bearish Knoxville divergence. Now I can put a link below this video about the Knoxville divergence as well. But I need to put a video up on YouTube about downloading this indicator for free. But for now, I'll just put a link to the website where you can download it for free. So we get both of these, all three of these things. We hit R3, which is too high, too far, too fast. We print two exhaustion type of bars or candles, an engulfing one and then one with really long wicks on either side. I like to call that the Chinese finger trap candle. That's not really a formation. And then we print bearish divergence. And then from there, from that point, it's just go time on a sell, on a short trade. And as you can see, we just drop precipitously and easily. And we go to two places when we fall. Why do we fall, Bruce? So we can learn how to get up. Thanks, Alfred. So we fall to the next day's pivot point, and we fall to the next week's pivot in green. Both of those are really fantastic targets, and that's a lot of ticks. That's a ton of movement. For a futures trader, that is a ton of movement. In fact, when this happens here, within 24 to 72 hours, something's going to happen, either for better or for worse. And we could place a stop loss right above where we were trading and let that thing rip. That is going to happen not very often, but when it does, you want to stand up and take notice. So here's another example here. This is a couple weeks later on the 4th of October, 2018, for those of you that want to follow along and look at your charts. And we hit S3. That's too much bearish movement too quickly. Now, this is different than the currency market. In the currency market, in some cases, on a commodity currency pair, we might actually just go ahead and buy immediately when this happens. But no, not on the S&P E-minis and not on the Japanese yen currency pairs. We're going to wait. We need to wait until we see a few different things. We need to see, and it will be green in this case, we need to see a green exhaustion button or dot. And that is a candle pattern like bullish engulfing, so forth. A bullish Chinese finger trap candle, which is like really long wicks, like fingers sticking into a box. We also might want to see bullish Knoxville divergence. And for those of you unfamiliar with that term, click the link below. There is a link below this video on getting the Knoxville divergence indicator free for a variety of platforms. So we got those two things in addition. Now we may also get what I like to call, and I've mentioned this recently, a bullish reversal tab. That indicator is also available below, okay? So all of these things, we might look for those things to happen. So look at this. We get the divergence we were looking for, right? We're sitting at Mos Eisley. We're checking all the speeders that come through every gate, every entrance, and we're looking for the divergence that we're looking for, the droids that we're looking for. And there it is. Boom shakalaka. We get the bullish Knoxville divergence. That means that price is falling, but the momentum indicator is rising and price went oversold. This, to me, is one of the three things we would consider being enough to take a trade in the buy direction for a few or a bunch of ticks. And look, it's another end of week. It's another Friday that this happened. The last time this happened was on Friday, and now it's happening on a Friday again. We buy, and then we hit the next day's pivot. That's blue. You can barely see that line there. But we're also probably going to try to climb up toward next week's pivot. I don't know if we're going to get there or not, but it's going to at least try to do that. And it doesn't get all the way to next week's pivot. So the easiest target on these trades is the next day's pivot point. High probability. And we would put a stop loss below the lows that were made. As you'll notice here, we also get this green exhaustion dot, which is absolutely fantastic. Let's keep going. Ooh, look at this. So we get a giant move through S3 here, right on the center of the screen. Journey to the center of the screen, starring Dwayne "The Rock" Johnson. That is a giant bearish move on the S&P E-mini around the 10th of October. And then we drop from there. Now, what we need to see is we need to see bullish divergence and an exhaustion bar or candle. We get the exhaustion bar pattern right there. And a lot of you I know are wondering, where do I get it? I'm going to stop everything in just a moment and show you how to get that on TradingView. But we also get bullish Knoxville divergence. That's just awesome. That's what we want. And then we jump up from there. We don't get all the way to the daily pivot, but we do jump up multiple ticks, right? We go from 27.57 to 27.97. That's a pretty nice move. That's a lot of movement for the regular old typical futures trader. That's a lot of ticks. Then we get another bullish Knoxville divergence and another crack at it. And we go right up to that next day's pivot point. And we're just going to move forward and see if we can do, oh, here it is again. I mean, if it ever gets old for you, then just stop watching the video. But let's look at this one. We get an exhaustion bar or candle and bearish Knoxville divergence after we hit R3. we're going to drop and hit a daily pivot. And if that's in the same location as the weekly pivot in green, that's just lovely. That's absolutely brilliant. Now, how do you get these little dots above and below on your charts? What you do is you go to indicators on TradingView and you type in exhaustion. And what this will do is you will see this indicator, the LEDC exhaustion bar. And you put that indicator on your chart. We'll get a download ready and some lessons ready on that as well. But for now, you can see this is a really great 1-2 punch combination. And if you like to trade the S&P E-minis, you like to trade the Japanese yen, you like to do some day trading, this is perfect. If you trade on NinjaTrader or TradeStation, or you want to trade the currency market with this methodology, with an automated strategy, you can follow the link below to do that as well. If you're interested in trading the FX market, I want to thank our sponsor, Forest Park FX. If you're interested in trading the FX market, contact Forest Park FX to receive cashback rebates on every trade you place. Contact forestparkfx.com. Forex trading carries a significant risk of loss. Terms and conditions will apply. Thanks for being here, everybody. Leave a like, leave a comment. Let me know how you're doing. I'm Rob Booker. We'll see you in the next one.